Good morning, everybody. Welcome to the Flow Show, Tuesday, 25th of June, creeping towards the end of the month. A bit lackluster in markets this morning, not too much going on. I expected vols would have been a bit lower, but they're still uppish. Euro dollar at 6.7%, cable a bit less, 6.12%. Dollar yen 8.58%, so that's still looking fairly volatile. Morning, Kay. Still enjoying the sunshine?
Good morning, Ryan. Yeah, preparing the barbecue slowly, and we have to take advantage of it. One more day tomorrow, and summer is done here in the UK.
Yeah. All right. So it's all. Do you hear that, everybody? Kay's invited us round for a barbecue this afternoon.
Hey.
I'll send out his address on Google later.
Yeah. Be very careful, you. I'm watching you.
Just bring some sausages and a bottle of wine, and he'll let you in. No problem at all.
Forget the sausages. Just bring the wine.
Well, the wine was to soak the sausages in, so you know, best of both worlds. Right. Oh, you got me feeling a bit hungry now. Oh yeah, I might have a barbecue myself later. Right. Before we get into barbecue recipes, let's get into market recipes and what's been going on. Our old mates at the PBOC, they continue to let things loosen a little tiny bit. The FIX last night 7.1225, up from 7.1201. So it's creeping higher. Dollar China itself still quite steady. We had a bit of a mooch under that 728 level, but as I suggested, we might find it's a bit of an area down to these former highs, and we pretty much held down there. But it's not going gangbusters, but still looking encouraging, certainly for mine and Mr. K's longs. CNY, this is the onshore Chinese currency, still sitting up pretty well at its highs, so that one's continuing to go the right way as well. China have apparently tried to entice the Germans and their car making. They're going to offer some lower tariffs or lowering of tariffs on large engine vehicles. That's if the Germans help them out with these tariffs that are supposedly coming from the EU. So they want Germany to put their voice forward as to why those tariffs shouldn't be put in place. And that's the Chinese are trying to sweet talk the deal, or sweeten the deal, shall we say, for that to happen. Chinese Premier Li says they are confident and capable to achieve the full year growth target of around 5%. You can never rule that out with the Chinese. They can fix their data numbers to print what they like, but certainly the data coming out of China isn't looking overly hot at the moment. So let's see what they have to do with that. Over in Japan, we had some PPI data overnight. Let's go to the right page. Where are we? Monday. Boom, 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 boom. So this is the corporate PPI number coming in a little bit softer. Was expected up at 3%. Came in at 2.5%. So lower than last month, still with a 2 handle on it. So that's good. What is better news is this Bank of Japan core CPI measure that came in at 2.1%, having fallen previously. So that's back above target. Not that you'd notice anything in the yen on the back of that. Nothing lasting anyway. We're still trading well into the 159s. Also in Japan, they are still apparently going to continue their subsidies for energy. They're looking, the Nikkei reporting that they're going to look to continue electricity subsidies for households. This program, I think, was supposed to come to an end this month, but it'd been touted that they might continue it forward, and that looks to be the case. So they're still trying to subdue prices for energy over there for Japanese households, which if they took those off, you'd see a pretty big jump in inflation over there, but not the right kind of inflation. Keeping to the data front, they're going to have to revise their Q1 data, apparently, because there's been some corrections on the construction orders from the Land Ministry, according to the Cabinet. Not going to matter too much. Don't know which way this data revision will go, whether it's better or for worse. But as we know, we're just about to finish off Q2, and we've had data since then, so I don't think anyone's going to be too much worried about it. The jawboning's continued. It's still, I won't call it low level, but it hasn't increased in rhetoric over the recent days. We've had Deputy, I think it was a Deputy Chief Cabinet Minister, Hayashi, talking. We've had Suzuki out, who was speaking to his counterpart over at South Korea, sharing serious concerns over the weakness of the yen and the won, with that South African counterpart there. So everyone's moaning about it in that part of the world. Bank of America has hiked their dollar-yen forecast for September to 163 from 161. They say that's on the rising outward equity investment. Don't know where they get that from. You can probably just point your finger and you get the right direction for this one. It is up, and I see little reasons why anything would change in the foreseeable future. We had a 20-year auction out overnight. A little bit softer on the bid to cover, 3.273 versus 3.647. Again, don't think that's going to create any big waves from that. Okay, we keep going in this dollar yen. We had that little wobble yesterday morning over the flow show, which we still don't know what it was, but yeah, the path of least resistance still remains.
I would say so. The thing is now, Ryan, we are in end of month. Anything can happen. I was just browsing through performances of indices this morning and looking at the year to date. The Nikkei is kind of matching the S&P, for instance. So from that front, on the month over month, it could create a bit of yen demand, perhaps. But on the year to date, we are pretty much running on similar rhythm. So I'm not sure whether there will be a lot to do in the yen over the course of this end of month. But we look at the 10-year JGBs, we're back turning around the 1%. It's just I think it's going to have to come from the dollar this time. Yes, jawboning. Yes, the market is watching that 160. We could see a little bit of heavy dollar into month end, perhaps, with that exception of tomorrow if the US corporates have stuff to do. But yeah, overall we are hanging in the 159s. We are not hanging around the 155 or 152, where the MOF and others can relax a bit. We're hanging around 159, and you compare it then with the yuan, it's a bit similar. The market is not yet buying into the yen story, right? We would be trading at least 2-3% more expensive for the yen if that would be the case. And again, we're looking at those yen crosses. They are still very much bid. We're back above 171. Not too much of a change from yesterday, really, but they are all still on the path of higher, you know. And it's going to take something special if it has to be driven by Japan to curb the yen weakness, right? It's still a case of for the yen to materially strengthen. I think the rest of the world needs to slow down materially.
Yeah. Do you think there's any scope for them to change their game plan with intervention? I mean, they must be looking at this thinking, well, you know, the Bank of Japan are tightening. They may do something in July. Inflation's going the right way. The economy's going the right way. Yet all roads still point to a weaker yen. Obviously, speed and speculation is a big part of it. But could they be looking at that and thinking, even if we do intervene, it's not going to stop this?
Yeah.
You know, can they think of something that, you know, I'm not going to say they'll go as far as putting a cap on it or
well, that would be a big mistake. Huh?
Yeah, but is there anything?
That would be a big mistake. I mean, we've seen what the Swiss cap has done for the S&P. I think they learned enough of a lesson there. Most of the central banks to come in and for them to come in and say like we are going to sit on the offer at 160 and you can pay us for whatever you like. I mean, no, that would be a big mistake.
Yeah,
Because
no,
they're really going to get the
that.
speculators.
Outside of doing something like that, which they won't obviously do, what else could they do to stop this?
I think they. I think it's still there's still a case for them waiting for what the Bank of Japan is going to do on the bond side, and perhaps bring forward another rate hike. I think the percentage chances that they do is high in July, and then look at what the market wants to do. And if the market still says, "Screw you, I'm going to sell yen," I think there may be a case for them to come in and say like, well, okay, now you've played enough. We have a lot of reserves. We are going to use, I don't know, $200 billion of reserve. We are going to smack it below 150 and keep it there. And then you would kill the speculators a bit and see what happens. See what happens then. But and then we have again the same issue. Imagine that that the U.S. economy just keeps on muddling on. Imagine that unemployment stays around this 4.1, 4.2%. No reason to start to panic, and inflation remaining just that sticky, and it's still an uphill battle. But that would at least kill the speculators for a while. But for the rest, it's I still find it very it's a hard job for them to really curb it.
Yeah, exactly. I mean, I'm sort of half sitting here thinking if we saw an intervention, the usual 300-400 pips.
Yeah, you buy it.
Pick it up, just to pick it up.
Yeah,
on a move like
right.
that, and see what happens. But yeah, I think closer to the BOJ we get, that's when I'll be less inclined to do something just to see what happens in case they do come out with some big guns like that. But and you're right, Ali. Again, there's always two sides of the story to currency strength and weakness, be it exporters or importers. It just depends which side your economy, which side of the balance your economy is. If you're a heavy manufacturer, heavy exporter, then currency works for you one way, doesn't work the other way. A bit like the UK manufacturing, not a huge export business, so a lot of our inflation comes from importing inflation for energy and stuff like that. So yeah, there's always two sides to that argument.
It's a bit asphyxiating the local economy now in Japan. I mean, a lot of the exporters, the big ones, call them the car makers, the heavy machinery makers. They do have factories elsewhere as well. They are not like pure exporters anymore. They're only exporters for when they repatriate yen profits for the mother house, and that is showing very big profits right now because of the weak yen. But if you look at the local economy, a weak yen, you have to pay in dollars for your gas and electricity and things like that. You have to the Japanese is usually a very active traveler. Look at the prices in what they have to spend on for travel. I don't think it's very good for the travel agencies in Japan either. And it may be good for the one side, but for the local side of the Japanese economy, this is a bit asphyxiating.
Yeah, very much. And so that just adds to the problem. What do you do with the currency? From a trade perspective, for us as traders, it's not really something that should feature, massively in your trading. As I say, unless your country you're looking at has a heavy export-import balance, shall we say, or tilt to the balance one side or the other. Ali, I'll look at dollar CAD in a moment, mate. Right, coming over to Europe, we had some PPI data out from Spain, a little less negative year on year. Month on month, it rose 0.8% versus minus 0.3 prior. So a little bit of inflationary pickup on the monthly numbers and not dropping as much on the yearly numbers. ECB's Villeroy talking about the elections as French banks are still solid despite the election sell-off. Bank liquidity and capital are very solid. Neither have been affected by market moves due to the political uncertainty. We'll see whether that remains the case this weekend after the first round elections. Fed's Mester has been waffling as well, though we probably shouldn't take too much from her right now, as this is her last month. She finishes the end of the month and is off to her retirement. So her comments are pretty much largely redundant, but she said mortgage bond sales should remain an option for the Fed. Fed's Goolsbee, he's summing up the mood at the Fed for a lot of Fed members. Said policy is restrictive. Slowing inflation data would open the door for easier policy. He's optimistic we'll see an improvement in the inflation data and hopeful the Fed will get more confidence in inflation heading back to 2%. The economy outside of inflation is showing signs of cooling. When you get we know in trading, hope is not a strategy. So when you've got the central bankers getting hopeful that something will happen, you know they're in a bit of a pickle. Fed's Daily says we need to keep an eye on employment as inflation is not the only risk, but says the current labour market is good but not frothy. Says it's hard to know if the US is truly on track to achieving price stability. Says there is no evidence stagflation or recession is in a future US or US future. Treasury Secretary Yellen expects that shelter inflation will moderate. Everyone's been saying this for the best part of 8-9 months now, and it's still yet to moderate. So, but if you say it often enough, one day you might be right. Bank of Canada's Macklem has been up and about, speaking at I think a parliamentary committee of some sort. Says the BOC sees employment rate rising further, and he says there's a further easing being seen in wages, and inflation is moving closer to target. Says Canada doesn't need a large increase in the jobless rate to get to 2% inflation. Sees some room for the economy to grow and have more jobs. Then says it's reasonable to expect further rate cuts. And says if the economy evolves broadly as we expect, it is reasonable to expect those further cuts, but we're going to take it one meeting at a time. An interesting comment here. He says, since we started raising rates, about 50% of mortgages have renewed, but the other 50% will have a bigger reset. And that's something that's factoring in to our monetary policy decisions. So he's talking about people who are going to be having to remortgage onto higher rates, which, if it becomes an issue, could force them, long story short, to maybe cut faster than maybe they expect or others expect. That's it. That's it for the news front as far as I've got. Anything swinging your way, Kay?
No, I think you covered most. The only thing is that I read an interesting article saying that there is a bit of Federal Reserve paper doing the rounds, and the document is calling for possible changes to the bank capital overhaul. They would like to lighten the burden of increased capital requirements for the US banks, and that may we have to know what's going to happen with it, obviously. But if that would come, sorry,
it'll go in the S&P.
Yeah, probably. But you know, we don't know what a regulator is going to think or say about it. But if that would be the case, that would alleviate a little bit of the potential tightness of the U.S. market, because who says higher capital says higher lending costs, higher well, the higher requirements means that they have to park more money at the Fed as well. So if that would come through, it may relax a little bit more of the tightness in the market. So this is something just to keep an eye on if there would be a decision on it, because it could have an impact on the bond market.
Yeah, it is going to be, all intents and purposes, just a form of easing. It's a bit like an RRR cut in China.
Yeah.
Lessening how much banks have to keep on their reserves in covering all their activities and whatnot. So yeah, I think in any way, shape or form, if we get a headline like that, you probably see stocks jumping, rallying quite significantly, because as I said, that'll be the easy line to draw. More cash. Oh, let's put it out and put it to work in the stock market. So yeah, that's a likely outcome if we get a headline like that.
Stocks and bonds probably.
Yeah,
walking a little bit together, a little higher if that would come out, but it's just a paper that now been submitted, so we don't even know when they will look at it.
Yeah, exactly. Right, before we look at prices, a quick look at what's coming up today. We've got Canada CPI, which is probably going to be the most important data we get today, aside from the consumer confidence number. So this is going to be one of those data points that's going to have the market jiggling around its Bank of Canada rate expectations. Obviously, softer number. Another hike will come a bit sooner, or may come a bit sooner. If it's in line, then they might sit on their hands. If it's hotter, then we might see a bit of a date change for expectations of the next Bank of Canada cut. So swing with the data punches on that one. We do get some house price data coming through as well, which I'm going to be keeping an eye on just in the context of the overall housing market. As mentioned, we've seen bit of weakness coming in the construction side, but the sales side and prices side seems to be holding up okay for now. So we'll see if that continues. The Conference Board consumer confidence numbers come in at 3 o'clock UK time. Keep an eye, obviously, on the headline, but also those inflation expectation numbers have a big influence over Fed thinking as well. Right, let's have a look what's going on. So Ali asking lots of questions about a loonie, and funny enough, I'm in a loonie trade myself. So let's have a quick look. Question on what's driving it. Okay, again, as we spoke about before, the context hasn't changed. You got a bank cutting. It's not following the Fed path because the Fed haven't started cutting yet. They may cut a couple more times, but overall, what has the currency done since the Bank of Canada started cutting? Absolutely nothing. We're still in a tight range. Okay, so yeah, the data isn't that weak. Oil has been a bit up and down, and maybe the CAD is maybe back on that bus for a little bit. It's been a bit of an on-off relationship, the correlation with oil of late, but oil is looking a bit more short-term bullish, which is potentially bullish for the CAD. As I said, if he wants to follow that correlation, and maybe in quiet markets, we can get on that bus a bit. Technically, I'm having a little long here, just a very small long against this 36.50 area, which has been a bit of a level, historical level. I'm going to play that down to the big figure. Maybe a hotter CPI number today gives it the kicker down there. That's what I'm just trading that side. I'm not going big in anything, really, because there's really low volatility and end of month and all the other shenanigans going on. I'm not going out on a limb in much trading, but we're here. This 36.5, not far off this big level. If that holds, then it'd be another solid hold and potentially a move back higher. I did have some sell stops in below this 90, 85, 90 area, which I might put back in, depending on what the driver is, because if we do break this level, it could have some legs. But again, I want to see the driver. If it's just end of month stuff, I'll be a bit more cautious. I don't want to get a trade flipped around just because there's some end of month weakness. And as soon as that passes, we're back up at 137 again. So I'll judge it based on the moves at the time. But all in all, for the dollar CAD, what are you? You are getting long as well. trade the levels. You know, the levels are pretty clear. I've decided to start at 136.50. More a bit of a FOMO just in case it does bounce from there, but I'm happy to add into the support down there. Otherwise, ranges, mates. Just trade the range, pick your levels, and wait for the levels to turn up. Right, what else have we got? Any other questions here, Patrick? Yeah,
okay.
Okay. Yeah, you deleted your pending order. It would have been a nice little order, mate. Would you got filled at 40? I think 41 was a low. Yeah, you would have been in profit. So, you know, you have your levels, mate. You go trade your levels. All else equal, really, I'm struggling to find any inspiration for any of these markets, mate, at the moment. We looked at dollar China, dollar Mex. That's deciding what it wants to do at this 18 level. We're just poking the nose above. At the moment, it did have a move under, which if it started to hold under this 18 area, would have been looking a bit more bearish, maybe for a move down towards the big 1740 level. But we're just nudging up a bit right now. Again, not sure what all this is. Carry traders, political risk waning, end of month, who knows? Gavin, I'm going to say it. It's going to be where we finish the week that's probably going to be important. As is for a lot of pairs this week. So I got out my final bit of long that I had from this break here, just under 17.95. So I'm flat on the MEX at the moment. No real interest to trade it here and now. I was thinking maybe try a little short if we hold this 18 level, but doesn't seem we're going to be doing that at the moment. So I might just go onto my hands, sit on my hands for this one. The other one I'm in and managing along is dollar rand. I can never find it on this bloody chart. I've got eye blindness. Where is it? Oh, anyone spot it? Shut up. There it is. I need to move it somewhere else. This one's still looking okay. Bit of a washing out of this 1810 level over the last day or so, but so really we're looking at this 18 and up towards this level, these 1823, 25, whatever you want to call it. It's been a bit of a zone. It goes back a bit, but I won't zoom out right now. So this one's still looking pretty constructive. Need to get above there, though. If you get above there, then maybe we're going to be heading up to 1850s, something like that, which I wouldn't mind at all. But while we're staying above 18, I'm still remain happy with this one. Let's see what else is going on. Stocks. Well, let's have a quick look at oil, as we were talking about the loonie. Again, shorter term, we're seeing a bit of a bounce. You know, we seem to bounce off these moves down into the low 70s for US oil. Mooching up around, trying to hold this 80-50 level, which has been quite a significant level on and off going back. So while we're just holding above 80-50, again, it does look a bit constructive for a move back higher. This 82.50 has been a bit of a level as well, going way back when. So, you know, not really any big drivers for oil at the moment on the fundamental side, Kay. What do you think is going on with this one?
People are talking about a bit of a mismatch in supply right now, but if I don't see too much on the fundamentals either to drive this much higher or lower. Are the speculators getting a bit nervous? I really don't know what to think about the oils right here and now, mate. No, I have no idea.
Yeah, it's a bit in the middle. Lots of sideways action in this one. You know, you can see that for over a year now. And yeah, just go with the flow on that one. Again, that's maybe why we're seeing volatility in the Canadian dollar remaining fairly tight versus the US dollar, just because all this. Yeah, you get moves when we hit highs, hit lows, but overall, we're just going sideways on this one. Quick look at yields to see what's going on in there. Oh, that's a bit messy. So here we are, still holding below that 2-cut mark, really, even though the Fed are up a bit higher, which is still the market saying that, yeah, it's the Fed's still on the path for cuts. So they're not really listening to the dots there. I might just take these out. You've been watching them long enough. We know the level here, 5% is the mark up there. Any moves up there, it means things are maybe heating up in the economy or inflation or whatever. And you're going to see the dollar respond to that. But a bit of calm and serenity in bond markets at the moment. 10s as well, still looking on a bit on the soft side again, reflective that the Fed is going to be heading to cuts more than hikes at the moment. Still holding that 420 line. That's something to keep an eye on, because we get under there, that might bring a little bit of dollar weakness coming into play for some of the other assets. Kay, give us some inspiration, mate.
Oof.
Or give us some barbecue recipes, one or the other.
Yeah, I guess that would be the easier one today. Just have a quick look at what's happening in the gold market. As I've been saying already a lot of times, this zone here, and in those low 23s, is a bit of a traffic zone. There's support coming in below there. For the time being, it's holding. I think that perhaps into month end, but we will have to survive tomorrow first. But perhaps into month end we may see a little bit of a pushback up, but we'll see. And also, as I've already been saying, if PBOC lets the yuan weaken, perhaps somewhere it may underpin gold as well sporadically. But for the time being, holding a small one here for as long, really, as we are above this zone here. I'm not keeping it small enough not to have to panic if it goes down another few well, another 20 or 30 bucks even. But yeah, I still think this may be, if we if we hold this zone here, that we could be in for a second half of the year, which could take this back higher. So that's started the plan, and see if this plan is going to work. Then on the short term, see this cable broke loose a little bit of this triangle, but you know, it's just really short-term stuff. We have to overcome again here as well tomorrow's hurdle, but it could be that for the end of the month we could see a little bit more traction on the markets. Could see a little more traction on this one as well. This is what I expect. Of course, I mean it's going to go up and down in the middle in the meantime. But I just started just a very small long, but I'm managing it extremely actively, so not to have any unconsidered risk on the books at all. But this is kind of one that I'm watching also for the rest of this week. Euro dollar. Bought some yesterday, but he is not making a lot of advance. I actually managed a little more this morning, which I didn't update in the room. But yeah, it's just hanging around here. Especially this one could especially be on the move in the European mornings, I would say, and then towards the end of the week. Looking at the equity divergence, it may be that we see some more demand into the end of week, but everything, of course, to be taken with a pinch of salt, because we are not only end of month, but also end of quarter and end of semi-fiscal year in many parts of the world. Here, I think the support is still going to be in this area here around that 106.70. You know, that's where the relatively solid support comes in. If we start to break below, it could spell more trouble. That could be one that happens perhaps next week or so, when if we get enough uncertainty surrounding the French elections. This is one that I'm going to watch for. If we get this spike higher, I don't know where it can take us. It can be violent at some times, especially when you go end of quarter or so. But if I see anywhere 108 or so, I may start to try and take the other side of this one in particular. And really, what else? Swiss pairs, small's encouraging, but I would say be a bit careful on your Swiss pairs, because we have seen several months in the Swissy that the Swiss has been bought on the month end. Okay, so be a bit careful. I'm not in particularly interested with this Swiss pair, but I'm going to have a close look at this one. I'm still in a little bit, as the people know in the room yesterday, and actually this morning I also let go some. I'm reducing my position, but this one I think, since there is not too much reason for Swiss franc to materially strengthen, if we would see a bit of a stronger Swiss franc into the month end, I may bring out the butcher's glove and catch a knife if we see enough Swiss strength, maybe a bit of an acceleration here, and then add to the position again. Joao Macron move, that's going to be next week. I think it could be a really messy one, because yesterday we were checking on those percentages and who may go into the second round. But if you get a three-way, I'm sorry, there's workers in the neighborhood. If you hear noise in the background, if you get a three-way second round, it could get really messy over there in France. So I think it's. If that is what is going to drive the euro, I think the euro may be a bit at risk next week. That is what I think about it. But to come back on this one I think is still a bit interesting. Also, Kiwi is also a high yielder. We have seen mixed data in Kiwi land, but not too much of a deterioration. So I think this one may be a little bit of a carry trade over there. So if I get the opportunity, as we can see in this zone here, it has been trading around those low 54s. If I get the opportunity to get some there when the time is right, that means that is a trade that I'm going to look at, especially come Thursday and Friday. Okay, and really for now, it's it's a bit of a watching paint dry. On the rand, I'm with Ryan. I'm still long. I think it's encouraging that we hold around 18 right now. We're trying to move back into this triangle here. It's encouraging that we had this washout, which has to be done at times, and now we are moving back up. I think that's a relatively encouraging move that we're seeing on the rand right now. Back over to you, mate.
Thanks, mate. Right, just to finish off, I think we need to keep an eye on the fixes, because it's going to be slightly different this month. I think, Kay, because tomorrow is normal corporate FX, normal corporate value date, but because of the move to T+1, that makes Thursday a possible value date for US, Mexico, Canada, doesn't it?
Good question. Is it for FX as well? Yeah.
Yeah.
Oh yes.
So we could have two corporate fixing periods, if you like.
Okay, then watch the 2 days.
Yeah.
I mean, yeah. Actually, not a bad point at all. We could have a delayed corporate day. We'll see what tomorrow brings, and then we will adapt. We will adapt to the situation as we usually do.
Yeah, and last bit of advice of the day, very important advice. If you're going to have a barbecue, I always like to line my barbecue with a foil tray. It just makes cleaning it up much easier with the old charcoal. And if you use a gas barbecue, you're banned from the flow show, because we don't do gas. You might as well cook on an oven.
Yeah, exactly.
And on that note, thank you very much, everybody. Please don't tell me you're a gas barbecue, okay?
No, mate. No, not at all. Yeah. Not at all. Only the best charcoal will do, mate.
Yeah, exactly. 1,000-year-old trees. Anyway, have a good day, everybody. Thanks for coming to the Flow Show, and we shall catch you all up tomorrow. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.